Well, what can we say? We knew the market was going to get a little bit more difficult to navigate. There's going to be days where you're super excited because the price action goes up on some news. But then there's going to be days where it goes down and you're going to be quite mad. But if you look back to the left of the chart, we've really just been in a choppy range where we have some strong moves up, strong moves down, strong moves up. Some might say that you kind of feel like you're in prison here between some of these very important gamma exposure levels. So we're going to talk about that and more on today's Stock Market Brief Show, where we navigate the financial markets through the lens of technical and intramarket analysis. If you haven't done so already, make sure to hit that thumbs up. It's greatly appreciated. Let's get into it. All right, welcome back, everybody. We got a big week ahead, so it's going to be important to look at some of these key levels. We'll get into some trade ideas too towards the end of the video and just get our heads wrapped around what the market's currently trying to do, right, in its current context. If we take a look at gamma exposure, you can see over here 5,200 since after that OPEX, which was just last Friday. This actually remains the call wall, which is a little bit different than what we've seen in the past where traders kept on reaching out further and further. Well, this time they're not doing that quite yet to that previous extent. So we'll continue to watch to see if 5,300 starts to grow or perhaps 5,250 to see if traders start reaching out there more. If they don't, it's going to be hard really to escape this 5,200 level as we've seen previously coming into 5,200 as traders started to reach it, or as we started price action started to get up there, we kept on rejecting. We came up there, rejected. We came up here even close today and we started pushing back away. Overall, we are in positive gamma territory, so that's where dealers look to buy the dip, sell a rip, and this is typically where vol suppresses. And if I take a look at this specific chart, you can just see a series of higher highs and higher lows in its current context. So this is a bullish structure. Where we need to pay more attention to is if we get below a 5-day moving average, and on top of that, if we get below this gamma flip line, that's where dealers look to sell into selling and then buy into buying. So you can see both plus or minus much more volatile price swings in both directions. If we take a look at the weekly expected move for the SPX, it's actually $80.44. So this is a pretty large expected move. But if we take a look at the 5-day moving average, it's still inclining at this current time. In fact, every time that we get below it, it seems like the market doesn't want to try to overtake it in the cash market session. So they do it when the bell rings, right? Or in the pre-market where they gap above it, they close below it, they gap above it, they close below it, they gap above it, they close below it, close below it, they gap above it, they close below it, they gap above it, right? They close below it and then they gapped above it today on that specific news around Apple and Google. So we did today close beneath it once again. So my thought is, okay, if we actually can hold beneath it and it actually really does start to turn around and then we start seeing a high, a lower high, a low, and then a lower low, that could change the structure here of the S&P 500 where we do actually get somewhat of a pullback. But to where? Well, we'll map out some levels. I did want to call out though, from a gamma exposure standpoint, we do have a put wall that is growing over here at about 5,000. So make sure to subscribe to this channel if you haven't done so already, because we'll update this throughout the week as time moves forward. Now, if we take a look at the Qs, you'll notice here that we don't have this series of higher highs and higher lows. It's really just trapped up in this prison, kind of like Prison Mike over here. It's just in a range, and the 5-day moving average is rather flat. So we'll see here if this is just a flag after this gap up and we start to move up into its weekly expected move, which is plus or minus $9, which is a large expected move here too. But as it stands, we did actually take out this prior swing low. So we have a lower low and we have a lower highs as it currently stands. If we start to scoop down further and the 5-day moving average does roll over, pay attention to the lower weekly expected move for this week and that potential gap fill. If you take a look at the IWM, it's a very similar situation. These are the 30-minute time frames, by the way. Sorry, I'm not using the 15-minute. I'm using the 30-minute with the 65-minute moving average, which is roughly the 5-day moving average. You can see over here as well where we had this kind of shoulder, then we came up, potential head, and then another shoulder here, creating the possibility of a head and shoulders topping pattern. You can see it's been holding as an area of resistance. So I don't see this looking too bullish here for the small caps until we can potentially come back above that 206.50, which is a level that we discussed on a prior video. We're right now below a declining 5-day moving average, not only right in the IWM, so small cap stocks, but also right now in I mean, this is rather neutral in the Qs, and then we just closed beneath it, but it's rather inclining here in the S&P 500. So things are getting a little interesting here. As we've been saying, it's going to be a little bit more difficult of an environment to navigate. So we got to just continue to just really be careful. Be very careful. You don't want to go too crazy and then get some sort of a shock or surprise, because there will be more opportunities that present themselves, obviously, in this marketplace. Now, going into the remainder of the week, the big thing here is going to be the Fed interest rate decision. Not necessarily what they're going to be doing specifically at this meeting, but you're going to want to pay attention to what they do as far as forecasting out, perhaps look at their dot plot. If we do look at Fed fund futures, what you'll see here is we're basically pricing in higher for longer till May. And then June, it's rather, now it's kind of a coin flip. Are we going to actually cut in June by 25 basis points? Well, we'll see what the Fed comes out and says, because this might change dramatically based off of these inflation reports. They might come out very hawkish, and then all of a sudden they have to price in that we're going to hold higher for longer. Now, we don't know if they're going to come out dovish, and if they do, that can be quite bullish in the markets. But what you'll see here, if you look at the June meeting and the probabilities of the 25 basis point cut, you can see they've been stair-stepping down. Meanwhile, keeping them where they currently are have been stair-stepping up higher. So I wonder if the market's kind of pricing that in. Now, it is going to be interesting to see how they respond to what's been going on. The price of oil, right, has been breaking out. It's closing at about, it just closed at a new yearly high, right? I mean, it's only March 18th, but that's a new yearly high for the price of crude oil. Copper, right? We just closed at a new yearly high and hit a new yearly high today too as well. Gold has been on a massive breakout right here, and now it's kind of just consolidating sideways. And then you look at the 10-year yield, and that's just closing in on a new high for the year too as well. And then you take a look at the dollar, and the dollar's been on a little bit of a bounce. It's been pretty defensive all year, but we came off slightly. That really helped the price of gold shoot up. But in the last couple of trading days, we've been moving up here rather strong in a defensive posture. So you have to wonder, with crude oil rising, which can have a huge impact on inflation, and then same with copper, right? Copper can have an impact like that too as well. And then you have kind of a safety trade in gold that's been, what are all these intermarket assets trying to tell us, kind of while the price action here is kind of getting a little bit more choppy, it's getting a little bit more top heavy. We got a lot of people starting to talking about pullbacks. We have traders that aren't really reaching out further yet as it stands, right? They're keeping kind of stuck here at the 5,200, but now we're starting to see something like 5,000 start to grow. So if we take a look at the book map and just dig a little bit deeper, kind of behind the candlesticks, what is the market potentially looking at as far as key levels? Up here, I have where ESM contract, right? This is ES, the June contract, where we closed for the day. And you'll see this is the expected move going into tomorrow's trading session. And this is the upper lower level. And this is the 2 standard deviation level. And what I'm noticing here is I see 540 contracts up here, roughly at around 52.75. I see 567 contracts down here, roughly at around 51.55, 51.50-ish area. And those are actually 2 standard deviation areas. And you can see that these contracts actually been here for a while, right? You might not be able to see it clearly with the pink lines that I drew, but it is there. Let me fix that. What did I just do? There we go. Okay, and then beneath all of that is we actually have a level of 520 contracts down there at 51.12. So those are going to be some important levels, right? The 51.12 over here, 51.50, and then 52.75. Those are some larger areas of liquidity that the longer they stay here, which they've been there throughout the entire trading day and potentially even longer, I didn't get to go back all the way, the longer that they're there, the most likely that they are to fill here in some points. Also note that we did have the potential change in trend. It's now been 3 days since the parabolic SAR upticks from the summation index as it's almost crossing down through zero. And we've had this negative divergence that has been forming on both the NASDAQ McClellan oscillator as well as the summation index there too. And you can just see the price action just kind of continue to just drift higher. We'll go into a couple of trade ideas. If you want more trade ideas, where I share a lot more charts, including my entire watch list, including my entire tight list. And then we give a lot of daily expected moves, weekly expected moves. I give monthly and quarterly expected moves. I give the zones document. If you like some of these charts, for example, like this one, I share the permalinks to that in the stock market indicators. And then I have some educational videos that they're all from YouTube, but I just kind of have them organized there. You get the entire suite of Tradie Ticks bots. That includes the query channel where you can do your own research by typing in various commands on various different tickers to get gamma exposure levels, to get all kinds of different data there. right down to like Monte Carlo simulations, like all kinds of crazy stuff that they offer. But I purchased the entire Trading Ticks suite bot, Discord suite, and I share that there with all the members. Then they have options flow like golden sweeps, large sweeps, Trading Flow bot, bullseye. They have a scout bot too, which we played around with it on Friday, I think it was, when we did the live stream to kind of watch to see some of the trades play out in real time. So on my next live stream, we'll do that again. It was kind of fun. And then you have access to the community there too as well. That is all a whopping $9 a month, and you could also pay annually and save, where it ends up being like $7 a month. Okay, so check that out if you haven't done so already. It's like I said, it's $9 a month. It's nothing crazy, and we give a lot of different research. It's not an alert service. Once again, it's not an alert service. I'm not going to tell you. I'm not going to hold your hand. You have to make your own decisions for yourself. That's why I can charge a very little amount, right, and give lots of different information or lots of different research and educational content there. So $9 a month, or you sign up annually, and then just so you sign up through Patreon. Okay, I don't post anything on Patreon. They're the billing system because I can't manage all of that, so they take care of it all for me. Then you sync your Discord up to it, and once you sync your Discord up to it, then you'll get access to the Discord channels, and then you go from there, and you can see all the content. So we're gonna hop into a couple of things. These were from the tight list, and so I'm just giving a couple updates. I give my tight list at the end of the week, right after Friday passes, so typically Sunday, maybe earlier, but here's a couple of them that I'll just really quickly share, right? I'm not looking to get too much exposure right now as it stands going into this Fed report, but these are decent looking charts. They're above a rising 20 and 50-day moving average, and they're kind of consolidating here. So something like MGNI, right? You can potentially call this a little flag as it's pulling back down. So if it breaks out of this 1150, you can have a tight stop loss that trails that. Just keep in mind, right, that's 50 cents per share on a loss, or maybe even more depending on where you put your stop. And that's actually a fairly sizable move. So you want to just make sure that your position sizing is accurate and things like this. Axon, AXON, this one's been on a pretty nice tear, and it broke out of this base. This was probably earnings. And then since then, we pushed a little higher, but this has also been consolidating in bullish context. So maybe if this consolidates a little bit more and the 20-day catches up, we can play a breakout up to the prior swing high and potentially even further. This is Sun Opta, so STKL. You can see that also probably a bullish earnings gap here, and now price is just coiling up here too as well. Always check the volume, check the bid-ask spread, right? I didn't get into too much detail here, but that's always important to do. But you can see the risk is getting very tight, and these are my type of trades. I like to play breakouts, right? And we're still in positive gamma territory, albeit that we're kind of below the 5-day moving average in the SPY. It is still kind of inclining. We're right there. But these are the environments that you typically get more fake outs. But I figured I did share these anyway, because we don't know exactly what's going to come from the Fed meeting. So yeah, nice contraction here in STKL. And then Dell also had this insane gap up on earnings. And this one has been kind of consolidating and kind of digesting that move here too as well. I recently posted a trade idea in the Discord group. The trade idea was target. The idea itself is really just pointing out the consolidation. It looked very similar to this, but we broke above the high of the prior candle. So I did enter a little position there. I know it's a lower beta names for the most part, so a little position there. If you're looking for something that's like not in this bullish context, I'll share this one. This is Snow, SNOW. This one had a very bearish earnings, right? There's some information about change in leadership or whatever. And this one's been kind of falling like a rock. But I will call out that the volume, so a big move to the downside, volume's been drying up, and then the price action itself is kind of coiling up here. So you can call this like a falling wedge, and it's happening also coming into and around this gap. Now you can potentially call the gap right here, but it actually technically closed right here, and then we gapped up and we never filled it. So 150 potentially may be a key level to hone in on, but I would still kind of wait to see strength. And if we do start popping up, you never know, you might be able to test the anchored VWAP from the prior swing high, which would be a large move, but just be aware that it's in bearish context. It's not quite like these names that were more in bullish context. That's all I got for you on today's episode, everybody. So just a couple of charts, various trade ideas, my thoughts on kind of what we see taking place going into the remainder of the week, as well as let me fix that, as well as kind of where we stand from a gamma exposure standpoint. Hope that helps. See you later.